Hey, good morning, everybody. It's Brian. Today is Friday, 21st of August. Let's go ahead and jump right into it. Interesting volatility over the last hour, 2 hours here this morning. Should be a fairly interesting day for us. Let's go ahead and just jump right into it. I'm gonna save all my normal. Well, maybe I won't. I don't know. I always say I'm gonna save my commentary. I never do because I'm so passionate about certain things when it comes down to trading in this trading journey and this trading life that we lead, that I can't always just keep my mouth shut. But anyway, let's go ahead and jump in to see what's going on this morning, and then we'll roll from there. So coming into this morning, what are we watching for? We always check a calendar first to see what news is coming up. We have a couple of things. We have a couple of things on the calendar here. Core retail sales in Canada is 7:30. Medium impact, so not high impact reports, but as I mentioned yesterday, even these medium impact reports could be more impactful just because of the uncertainty and volatility that's in the market right now. A lot of, you can almost, it's like a palpable energy. You can feel that folks are looking at the market and feeling like we're kind of around tops, and you hear a lot of discussion around that. And even though the train keeps moving north on indexes, stock market, right, overall, it seems like it's slowing pretty considerably. And I think you get that feeling kind of through most markets. That rebel comes through most markets. So even though these are medium impact on the CAD, they could be more impactful. Later into the day, though, we have existing home sales report, which is low impact potential on the U.S., but this could also be a little more impactful. I mean, we mentioned the other day we had a new home sales report came out, and we saw how the market reacted kind of initially with that. Existing home sales is another kind of leading indicator. So even though it's listed as a low impact, if there's a big delta from expectation, that could be a sign that could be interpreted, in a certain way by the market, and could drive some change. So remember, everything that we're looking at, news doesn't change the market necessarily. It's just a catalyst, and how it's interpreted is it becomes that catalyst to start wheels in motion for a change in the market. So it's a lot of times it's a lot of these smaller, lower impact news builds up, and it's kind of that proverbial straw that broke the camel's back. And I've said it before, and I don't know that it really needs to be said again, but I'm going to go ahead and say it. At some point, reality sets in with where we are with jobs and businesses and purchasing of goods and services that will drive the market. At some point, earnings are going to slip considerably, and I think we'll see that day of reckoning. However, the bright side of that, until that happens, we just keep riding the train. So remember, we've got our personal opinions on what's going to happen, and then we've got our trading plan on what we do on a daily basis, and those can be very different, and it's okay. You've got to be able to separate that, because what you think, or what I think, or what anybody on TV thinks, or anybody in blog posts or in your email box thinks, it doesn't matter. Their opinion is their opinion. Opinions are like assholes, right? Everybody's got one. It doesn't matter. What matters is when enough of that pressure builds up and things start to change, and that's where your trading plan comes in. Your trading plan is what matters, because that's what's going to take you on that long-term journey to consistent and profitable trading is doing things consistently with a quantifiable reason for doing it. I know I sound like a broken record. So let's just get off of that. Let's go over here. We'll have a look at what's going on in the markets, and then let you guys get on with it. Forex this morning coming into things. I don't see a lot of trading opportunity really, unless you're looking at reversals. Most of our currencies, if you look at the currencies that are moving, you've got the USD pushing to strength, you've got the pound here pushing to weakness. You look at that range. If you come over here and you look at the pound USD, for example, you can see based on how long this is. Well, you can see over here, based on the divergence you've been seeing for hours and hours and hours, you would expect to see a pretty nice downward trend on the pound USD currency pairing. And there is, if you go and you look at that, we can see a really big downward trend. It's moved 150 pips already today on an average of a 100 to 120-ish, right? So it's hit its typical range. Does that mean it can't move more? Well, no, of course not. It could move another 100 pips very easily. But what's the likelihood? And that's what we keep talking about, odds and probabilities. We have to think in odds and probabilities. There's a chance that a 6-year-old, well, maybe not a 6, but a 12-year-old could step up to bat against a major league pitcher and get a hit. I mean, odds are he won't, but there's a chance that could happen. So, we look at things in the odds and probabilities, and we don't base every one of our trades on the chance something might happen. So in this case, for example, we look at the currency strength index over here. We look at the currency strength meter. We see all the things going on. We see that we've got a really nice sell off on the pound, sell off on the euro, on the Swissy. But then we look at the data over here, and we see that most of our currency pairings have moved at or slightly more than their typical ranges would allow for. So, as far as looking at a breakout in the direction of the current day trend, and where our current divergence is, that's not a, odds and probabilities say, that's not necessarily a great play. So, in this case today, what you might be looking for, I guess first thing is the breakout box style trade. We're going to sit on our hands, not do that. So then it comes down to, well, what would I trade if I'm trading Forex for the day? You'd continue to watch the currency strength meter here, but what you might start watching for is convergence. So instead of we're always watching for divergence, we're looking for currencies that begin diverging very steeply and rapidly from one another. You can look at those currencies that have been diverging for hours and hours and hours, and really over the course of the day or more, start to converge, start to really move steeply and rapidly towards one another, back towards this midpoint, and maybe even reverse over this. So you get divergence if the pound moves back to the midpoint and then starts moving steeply and rapidly to the stronger side, and the USD moves through here and moves steeply and rapidly to the weaker side. Then that would be a switching of the divergence, but obviously leading up to that point you've got convergence, and as they converge, that would be the opportunity to start looking at potential reversals there, which we don't talk about a lot here, but that would be an opportunity to start looking at reversals, especially on these currency pairings that have already exceeded their typical ranges. Now, with that said, it's counter trend, it's counter to a lot of things, so you should always be trading with a stop loss anyway, but you might keep in mind there's been a lot of momentum bringing it to that point of where it is, so don't expect that reversal just to happen instantly. It might take time for that to reverse, and it might even go further against you before it finally reverses. So, or it might just keep going. I mean, who knows? Long and short of that is, use a stop loss, have a what's your max pain threshold for, percentage loss for the day, and be sure to set that, look at that in advance and set that so that, if that reversal doesn't happen, even though you've got good convergence happening, if that reversal doesn't happen, you can bail out of that trade and go, well, the trade kept moving, right? Like we talk about in the future side of things. Future side of things, what's going on over here? Well, let's have a quick look at futures market. Like I said, there's been a big sell-off this morning, which it's pre-market, and it was driven more than likely by the things that were happening on the euro news that came out at the beginning of the market session. So anyway, what's going on over here in the S&P? Well, yesterday we were hanging out right around this 3360 area. It was a key point of resistance for it. It broke through it. Now it's been support. Right now, leading into the new market session, this is pulled back and we're back at 3360 again. So this number just keeps popping up, 3360 here again. A lot of momentum bringing us down to this in off trading hours, but we are at a key level. And remember, it's a key level, 3360, but as I mentioned before, there's a top of that level and there's a bottom of that level. So you're really looking at kind of a 3360 is our level that's marked on here, but keep in mind the bottom edge of that would be like 3350 area. So we'd be looking for reversals off of this. If but let's wait and see how the market opens. Right now, until this closes, we're technically, even though it's touched really. So I'd say at this point kind of a mixed market. We need to wait and see what happens with the price coming off of this key area here before we really do anything. Probably another good day just to sit on your hands. But for those of you that can't just sit on your hands, look for reversal off of this 33.60, maybe as far down as 33.50. And if it reverses off of that and breaks back through 33.70, same level we talked about yesterday, that'd be your buy, potential buy spot to look for it to continue north, which is with that longer term 4-hour bias. If it breaks down below and we crack through 33.50, then that might be your spot to look at potential shorts, which again is counter to this longer term trend, but might be profitable in the short term to look at some shorts off of that break of 33.50. But the overall, the longer term bias is long. The 4-hour bias is long. The 30-minute bias, until this actually crosses is long, but that'll depend whether this crosses or just touches and moves back on. It really is kind of dependent on what happens in the next couple of candles prior to the market open. But as far as trade ideas on this, I'd probably prefer the long bias on it, which would be a break of 33.70, looking to continue back to the long side here. But always use a stop, because we've been right a lot, but we're going to be wrong at some point, and we have to accept that as part of trading. We're not going to be right all the time, no matter what happens. All right. On crude, we've got mixed bias again. Crude saw a lot of volatility around news yesterday. Here coming into the morning, the 30-minute bias is short, but the 4-hour bias is long. So we have a mixed bias on this. So that tells us sit on our hands. Let's not do anything with crude. Hey, it's Friday. Let's just take it easy, right? Gold has flipped on us. We've got a short bias on the 4-hour and a short bias on the 30-minute. So that's a tough one for me. But ultimately, it's saying, hey, right now we should be looking to potentially continue selling gold. In that the 4-hour bias is short and the 30-minute bias is short. What does that look like? How would we want to keep selling gold? Well, if it pulls back, to this 1940, 1950 area, that would be the spot to sell, a bounce from. So it pull back and then look to go short off of that. 1930 would have been that level to short from, but we're already beyond it coming into right now. So as far as a breakout, so I don't really have a breakout spot for us. I guess we could say 1920 in that, we kind of look and see here on the 4-hour time frame how that looks. It's a whole number, a key level. Maybe look for trades down to 1900, but at 1900, I would certainly, if it did push down that low, I would be looking for buying opportunities off of 1900, even though the bias is short on these. So, but bias is short. That tells us, hey, we're looking for short trading opportunities. So that would look at pullbacks, as I mentioned before, back to this 1950 area, 1940 area, and then short it off of there. Right. So those are the trade ideas. We didn't have any trades that met the criteria yesterday of what we're looking at with the pullback. Looking at the agreed upon trend or the bias in the 4-hour and the 30-minute, and then watching for pullbacks, and then trailing off at the top of previously closed candles or bottom, depending on the direction. Didn't have trades that met that criteria, so I don't have anything to talk about as far as those go. We take them as we get them. So that is really it. I think we'll leave it here. I've given you some trade ideas on both forex and the futures market. We'll leave it here. Let you guys get on with your trading day. If I have anything to talk about this afternoon, I'll put it in. Otherwise, have a great weekend. As I always say on Friday, if you don't have a trading plan, this is a great time to start working on your trading plan. Take the weekend. It's a Friday. We have a lot of mixed bias like we did yesterday. We have a lot of mixed bias today as well. If you don't have a plan, this is start working on one. You're not doing anything in the market anyway. You're just going to sit there and watch paint dry. So go through and start documenting your plan. Document what is of interest to you, what you need to see in order to have an entry, how you'd want to manage that, and then start looking at charts, going back and back testing it, seeing how it works out, seeing what your expectancy is, seeing what potential drawdown could be, so on and so forth. it just takes a little bit of time. It's not it doesn't have to be this huge in-depth plan. It can be simple, but having it makes all the difference in the world. So anyway, that's it for me. I'm going to leave it here. You guys have a great weekend, and we'll talk to you soon. If you have any questions about anything, feel free. You can hit me on Facebook or hit me an email. I'm happy to help. That's what I'm here doing with this free channel, this free content, is I want to help. I want to help you get a grasp of these things that have been fairly elusive maybe to you in the past. And I can't do it for you. No one can do it for you. You can buy every system in the world, and no matter how great that system might be, if you don't actually put in the work to learn that system and execute that system and do it consistently, you're never going to be profitable. And if you don't fully understand the system, your subconscious isn't going to allow you to do it anyway, and you're never going to be profitable. So there's a lot to consider there, and a lot to learn, I think, about self more than systems, so that you can develop the right mindset to be successful long term. So anyway, I'll leave it here. You guys have a great weekend, and like I said, reach out if you need help. Reach out. All right.